to a devastating 24 hours for Bitcoin, sends it tumbling down below $19,000. And what is next for Bitcoin and the crypto markets? What are the next key levels? How much lower can we go? This is something we've been calling out for a very long time. I was calling that we could be heading down to that 17,600 level again, and it may be coming true that those levels could be coming back into play. We're going to look at the technicals. We're going to look at the macroeconomics because we still have a big couple of days left, which could throw an extra spanner in the works. Smash up the likes. Don't forget to subscribe, guys. As always, check out the links in the description if you want to buy any crypto. Look at that, guys. Look at that. That is not great at all. But when you zoom out and when you take the emotions out, I know it sounds very basic and I keep harping on about the same things. Aren't these things obvious? I mean, have we not been calling these trends out? Have we not been saying that we're expecting lower price points? And I know it's boring. I know you guys want to see pumps. I know that's why you're in crypto. But when you're in a bear market, you have to respect this. And that's how you're going to be able to buy your crypto in a smart, rational way. When we were moving up to here to 25,000 and we got thrown back down, this was obvious that we were going to lose this trend. We lost the trend. We accumulated. It was obvious we were going to break this trend to the downside. Entered our symmetrical triangle pattern. And you could see I set the price targets of this symmetrical triangle. I said the conservative price target brings you down to that 18,800 range. We've exactly met that price target. I then said you've got the bottom of the channel coming in at 18,700. That's where we're seeing a little bit of support now. But I personally don't expect that to hold. I'm going to explain why shortly. And then your longer term, if you take the flagpole approach, your longer price term target can bring you even down to confluence around this level at 17,500. Now, why is that important? Well, that's the low we created all the way back in June with the whole 3 hours capital drama as well. So not to be the bearer of bad news, but these are the levels I'm looking out for. As I mentioned, the lower we get to the lower band of our channel, I am nibbling a bit more, right? So I am nibbling and dollar cost averaging like I promised in this range, okay? And I'm happy to do that in this range around here. But what I will be looking out for is another break of this trend and coming down to these kinds of levels here. These kind of levels will provide an even better opportunity to dollar cost average in. Now, there's no guarantee we're going to be getting to those prices, right? There's no guarantee, and that is why you'll see me nibbling now and nibbling a little bit more as we break down, if we do break down indeed. Now, a few things before we get into some of the macroeconomic elements. You can see fear and greed index is sitting at 24. I don't think that this has fully reflected the dump we've just had. We can also see the Fed rate monitor tool is showing that 70% of the market is pricing in a more aggressive rate hike, a good 75 basis point rate hike on September the 21st. Remember, next week on the 13th of September, we get a much anticipated CPI reading. The markets will be looking to that. But before that, today, we've got some Fed officials speaking. I wish they wouldn't speak, but they are. You've got Fed Barkin, Mester, and Brainard. So if you're trading on a short time frame, be very careful. They can move the markets, but not as much as tomorrow, which is Jerome Powell speaking, as well as Christine Lagarde, with the ECB deciding on their monetary rate decision as well. So a big day tomorrow, which we have to keep an eye on. And these are all events which are giving me more downside bias. I can't think of positive things that these Fed officials or Jerome Powell are going to say. They're going to keep their hands firmly around the neck of the markets to make sure the markets react in the way that they want markets to react. And speaking of reacting, we can see the liquidations yesterday. The liquidations yesterday were horrific. I mean, $250 million in long liquidations yesterday. So many eager people being told dreams and being promised by influencers that Bitcoin's going to run back up to 40,000. There was no evidence of that. You're in a downtrend. Bears have been in control for a long time, and I don't know where people just suddenly get this urge to go leverage long in a situation against a trend, and it just didn't make sense to me. You're at the apex of a symmetrical triangle. We've been calling it out for days that we're just holding this support around 20,000. Yes, it was boring, which is why a lot of people get excited that, oh, look, we're holding support at 20,000, but there was no evidence to suggest we were going to move to the upside. There was no macroeconomic catalyst in our favor. So, you know, we had to hold downside bias at that point. Now, let's head over to the daily chart and let's get a clean chart here. Slightly cleaner anyway. What I want to show you here is I want to bring out the VPVR. This is the volume profile range. Now remember, that point of control, the red line, was sitting at 20,000. Now if I move me out the way for a second, what you will see is that once we lose this level, which we just have, volume significantly become thinner. So for this to capitulate down to that 17,600 level becomes easier for the bears to do. Now, what will happen is around the 18,000 level, and particularly around 17,600, there will be buy orders. There'll be people desperate waiting to buy the dip, because that's how humans sometimes think. They go, when we hit 18,000, I'm going to be buying. When we hit 17,500, I'm going to be buying. They set those mental limit orders, and that's where they tend to buy in at key round levels. levels. That's why for me, I nibble around these levels. I don't promise myself that we're going to get to 18,000. I don't promise myself that we're going to get exactly to 17,600. So if I see a price that I like, I dollar cost average in some more. And that's the way I play it here. But you can see the volumes are low. This will become a little bit easier now for the bears to quickly capitulate us down. But remember, these flushes down can happen very quickly. And when they do, the dip is bought very quickly as well. So the capitulation can happen quickly and the dip can get bought very quickly. And you could be back at 20,000 quite quickly, having visited 17,600. So this is something we have to watch out for. We have to marry that up with what's going on in the macro economy as well, particularly with Jerome Powell and Christine Lagarde tomorrow. Speaking of macro economy, let's also take a look at the dollar index. And this is our nemesis, right? We know that the dollar index is inversely correlated to Bitcoin. And we said at the time, if you guys remember, when we came down into this ribbon, we said this would be positive for Bitcoin, and we saw that rally. Whilst this was happening, Bitcoin did its little dance up to 25,000, and that was because Jerome Powell came out a little bit dovish. But since then, what has happened? Jerome Powell has come out very aggressive. He's come out very hawkish. He says he's still got work to do, and dollar index bounced very strongly off its EMA ribbon, showing another upward impulse move, creating new highs and pushing really nicely strongly here in this pattern. So what this is indicating is that Bitcoin is facing an uphill task. Everybody's flocking to the dollar. No matter what currency they're in right now, it's not as holding up as strong as the US dollar right now. The US economy is holding up better than others. We had positive non-farm payrolls. You had good ISM number yesterday, and that is showing that the economy is stronger than expected. But remember, that's a double-edged sword. It means more people are going to flock to the US dollar. It means Jerome Powell can be more aggressive with interest rate hikes, which is bad for risk on mentality and bad for Bitcoin. Now, speaking of bad for Bitcoin, what we have to also notice is when Bitcoin falls or gets a little crash like this, two coins are falling most this month, and that is going to be your Ethereum and Cardano, the two projects with their hard fall coming up this month, because they're going to have extra impulse moves to the upside when things are looking positive. If Bitcoin dumps during this kind of month where you've got such a hard fall coming up, do not be surprised to see these fall more aggressively, okay? So you can see here, Ethereum has been caught out quite badly by Bitcoin getting a crash yesterday, as has Cardano. They're going to fall more than other altcoins simply because of the excitement and the extra trading volume and speculation volume in those projects right now leading up to their respective hard forks. So that's something for us to watch closely as well. Let's also take a look at the Bitcoin dominance. And what we can see Bitcoin dominance, we're now at my 39.65 level. Remember, this is my level, which you can see has held up as beautiful support for a very long time. So what this is showing is that the dominance is declining, which is very, very interesting, because normally you would expect Bitcoin dominance to start increasing. But again, people are still in this market. I can't explain this more. The retail interest in crypto is as high as it's ever been, in my opinion. And it's based on people who have seen the previous cycles and said, I'm not falling for it this time. So what I'm saying is this is probably the most retail interest I've seen in the bear market, simply because adoption is growing. And now you've got a bunch of retail investors who would have shaken out in previous bull markets to go, I'm not shaking out this time. And they're just plowing on. They're buying Ethereum. They're buying ADA going into the hard fork. They're buying these projects and they're accumulating their positions. And that's one of the reasons why, despite a bear market decline, we're still seeing dominance continue to fall here as people do move into altcoins as well, which is very, very interesting to see. So there you have it, guys. Those are the key levels I'm looking out for in the charts. One more thing I do want to show you, which is very interesting on the weekly chart, is if I pull out this weekly, what I want to show you is, remember we were using this 200-week moving average. This has been a very important support resistance level. Let's go to this chart. This has been a very important support to resistance level. You can see we bounced off of it, gone on a big run, bounced off of it, went on our run, bounced off of it, went on our huge run. And this time we closed below it, we tried to get back above, and then we got rejected down. So in essence, now this 200-week moving average is acting as resistance. So now what we need to do is we need to bring out our 300-week moving average, which is a slightly longer period, which gives you that more smoothing. And this is where we need to look for support. And if we look at where this currently sits right now, this sits at 17,400. So your 300-week moving average sits at 17,400, which ties in with that 17.5 level at the lows here for Bitcoin. So that is why that gives you confidence around that level. That could this flush down to those levels and pick up some support? That's the question here. Now, longer term, here's what gets a little bit more scary, right? A little bit more scary pattern is if you want to take this pattern. If you want to take this pattern, which is the breakout from this continuation pattern, this technical flagpole brings you down to the 10,200 level. So this is not great at all, okay? So I do want to make you guys aware. I'm not saying they're going to play out yet. I'm still very focused on losing that channel and then focus on 17,600. But if we start falling below then, I need to be mentally prepared with a 14,000 support level and then the next support level at around 10,000. And this technical target with that impulse wave does give you a price target of 10,000. I know that sounds absurd. I know it sounds crazy. I'm not going to harp on about this figure or to say we're definitely going to that figure, but it's just a calculation I've put in my mind just to test my conviction and to make sure I'm not going to panic sell. And that's the reality of what's going on right now. These capitulations to the downside are here to create panic, right? They're here to create panic to make you sell your Bitcoin. If you have conviction, you won't sell. And that is why I'm constantly testing my conviction. I always ask myself, if Bitcoin does fall to 15,000, what am I going to do? Am I going to panic sell? Am I going to accumulate more? If we fall to 10,000, which is not easy, by the way, all these people calling 10,000, it is crazy. Like, don't just think, oh, we've fallen from 20 to 18, therefore 18 to 15 is going to be equally as easy. No, it's an elastic band. Remember that analogy, the elastic band, the further you pull it back, each millimeter becomes harder and harder. It's the same with Bitcoin. You're going to have more people buying the dip, more people interested in loading their bags, including whales and institutions who want to buy at lower prices. So it's not as easy to just fall linearly. It becomes harder and harder the lower you want to push Bitcoin. Okay, and obviously you have to remember the hash rate adjusts to make the block mining rewards more attractive to miners as well at those points. So all of this comes into play to say, look, guys, don't be greedy to the downside. Don't wait for these crazy price targets to the upside that people are telling you, nor to the downside. Okay, keep it methodical. Let the data lead you, and then trade safely. Hope you guys enjoyed this video. If you appreciate this type of content in the moment, live, smash up the likes, don't forget to subscribe, go watch this video here, and I'll see you in the next one.